The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour. This is the 9th of April. And this is the day, well, yeah, it is the day. It's the day that I fly out to San Francisco much later today, getting overnight. And looking forward to it. Why? Because look here, right on the front page of TFNN, you will find Basil Chapman 2-hour live workshop, San Francisco, April the 10th. The Tide of the Market, a free live workshop. And what I like to do is not just a workshop, it's a meetup. And I want to see as many of you out there that listen to TFNN that, really get something from it. I want to hear from you. I want to be able to put a face, a name to the face or a face to the name. And it's really important. It's important to me. I could have just taken a break and just done my newsletter every day and done my show and then spent the rest of the day just kind of, going around. I haven't been to San Francisco for a few years, and I really do enjoy it. And in fact, I haven't spent time going around San Francisco itself for a really long time because the last time I was there, we went to a friend's son's wedding. I spent a good deal of time with my good friend in Oakland, and friends actually, I should say. And we did a lot of sightseeing, just going up and down different places. So we only went to San Francisco itself for about one afternoon, and then to the museums, etc. Well, maybe 2 afternoons. So this is a little different, being in the heart of San Francisco, but that's really not the issue. The issue is that in this, all that's required of you, and it's really a favor. I can't tell you that that's the only way you're going to be able to get in. Of course you get in, I'll accept everyone. But the most important thing is I need to be able to, Marriott Marquis was kind enough to set aside a room at an extraordinarily difficult time, very busy. I mean, I don't even want to tell you the rigmarole that it was to be able to actually get a room. I need to be kind enough to be able to tell them how many people will be coming. The only way we're going to be able to do that, well, there are two things that happen. One is I need for you just to go to the front page of TFNN, check out where it says San Fran free live workshop, and then go learn more. And there, all it asks you is just your name and your address, so that all we need is for you to be able to give us some information so that we can tell them that X number of people are coming. But what it does is it sets you up for the chance to win my CD introducing the ChapmanWave methodology. And while I'm thinking about that, let me just set it up here so that you actually know what I'm talking about. And that's a $249 value. And I've had a number of people ask me about the CD, etc. I'm just, I'm the only one there. I did this totally unofficially. I surprised TFNN by saying I'm going to be out there. Wife's at a conference I'm going with. I'm going to do my show, do my newsletter as many days as I can. But at the same time, I am going to take a little bit of a break. But I also said, I want to take one evening, if I can do that, between 6 o'clock and 8 o'clock. I chose April the 10th. That's tomorrow night, Wednesday night, 6 to 8 West Coast time. I'd like to meet the people. I'd like to meet subscribers. It's just, how often do I get out there? So that was really my thinking. And what's most important about that is that in that I get an opportunity. It's really a great opportunity. Just to be with you. I'd like to take questions. I want to talk to you about the tide of the market. What is so important about the tide of the market? Well, I'll tell you what is important about the tide of the market. I just had to type in my, I should not be doing this at the same time. There you go. The tide of the market is such an important thing because if you can identify the tide, it means that what you do is you have an opportunity to be in the position that tells you, I'm not finding it right now, Don. I will find it during the break. And what's important is that if you identify the direction that you're in, the larger direction, not the smaller direction. It just helps you to be in the right position. For instance, I'm looking at the market right at this particular point. I'm getting a couple of conflicting signals, but I use a particular technical tool that tells me about buying intensity and selling intensity. And that tool is still saying that the buying intensity is there, that I must not ignore the fact that the tide at this particular time still appears to be rising in the larger context. That's the weekly and the monthly. The daily is getting to a point where the tide could change a little bit. Let's call it the current could change, not the tide, but maybe the current. But in the meantime, what's really important about this whole thing is that if you are able to, how can I put it? If you're able to go to each time frame and decipher what's going on, what it says is, in the context of the time frame that you're looking, there are enough signals to tell you that you are looking at the chance of the trend changing or the trend continuing. I'm going to show you something now. I'm going to skip what I was going to talk about right away. Yesterday we went long a stock that I wanted to buy because I've liked the technicals. SRPT, and that's called Sarepta Therapeutics, Inc. I had a very tight stop on it. So we got in. I wanted to pull back, and that closed the day before at 36.21. And then I saw early in the morning, pre-market, that there was maybe some buying or something. I didn't want it there. I wanted much lower down. So I said to buy it for my subscribers at 36.21, which we did. But I had a very tight 38-cent stop. So we took a 1% loss. But the whole plan was that it was going to move higher. In this particular market environment, where you go up and down every single day for 15 days, I just didn't want subscribers to be stuck in a stock that maybe closes at the low. In this case, what if it closed at 34.88? Yeah, we are. We're in at 36.21, and we're out at 35, whatever it is, 80 something. And all of a sudden, the thing slides further, and instead of closing at 34.88 and then bouncing, it gaps down the next morning. Then we'd be vulnerable. And I said this is a very risky, highly vulnerable stock. But look what's happening. It is still about to do exactly what I was looking at. Go to peak D above 37.70. I can't guarantee it, but there's an 80% or higher chance that this week or very soon it'll go above 37.70 for leg D. And there were a number of technical indications to say that you should at least try for that. So that's the tide. Now the tide is saying in this particular one that you've got that rectangle pattern. Within the rectangle, I always talk about the tide. So that in a rectangle, very often you go from the bottom in a flag formation to a ChapmanWave A to B to C, possibly even a D, usually a D. And then you've got to be careful. So that's identifying the tide. Let's look at something else if we're looking at the tide. If we're looking at the Dow Industrials, look, the monthly tide is still rising. Weekly tide so far is still rising, even though this candle from last week is the one that's going to give us an incredible amount of information over the next 2-3 days. It's still saying we're going up. And the divergence in the daily between the rising price and the falling technicals is something to be concerned about. Price is the dictator of the trend, so we're going to follow the price. So I just wanted to go through that. And now here's another thing that's quite important as far as I'm concerned. When we are looking at all these different time frames, you're trading. You should know what you're trading, which time frames you're trading. In other words, if you're doing intraday, you want to be looking at much shorter time frames. Then your larger one might be the 60-minute. Or I like the 120-minute. That's my favorite. If you're looking at swing trades, then you want the weekly as your benchmark, and your daily will be the one that takes you to the goal. but I use the 120-minute trade for swings between 3 to 5 days. That's the way I find that it works the best. So just understand your style, understand what you're looking for. Then there are times when you want to just be in a position where you take a trade as a trade, but your background thinking is, for instance, we got a stock today. I don't know if it's going to work, but it's a stock we've had for a long time, in and out, in and out. We've made money, nice money on it. I want to try to get the stock as a two-position trade. So we want to start a position today, knowing that there's a vulnerability to the downside. I don't think it's too much to the downside. So it'll give me an opportunity to get the second position if I need the second position. I want the subscribers. This is one that has the capacity and the capability. If it holds and it does what I want it to do, of course it doesn't know that I wanted to do that, but if it holds well, now I'm looking at something that has the potential for a summer trade, a trade that goes on for a couple of months. I like that. Okay, enough with the stories. I just wanted to show you the chart that I was looking for. I'll just swing it across here. Oops, I haven't got my, give me 1 second here. I just need to get this up. 1 second, there we go. I'm going to go right to the front page, and I'm going to click on there. So I, too, have the same charts that many of you are looking at. There it is. Identify the trend and then trade with the trend. You see the arrow down? It looks wrong here. It should be an arrow up. Here the arrow up looks like it's the wrong way around. This is the way it should be, like that. Now, I also love to do, these are the things I will talk about tomorrow night. I'm going to talk about how certain indicators can keep you in a trend for a very long time. We've got a stock that we've held since November, even though we've lightened up, and it's actually acting beautifully right now. We've only got a very small core position in it at this particular time because we took very big gains in it. But that's from November. In this kind of market, that's really nice. So I wanted to go through those things. And now let me just run the numbers down. We're done with all that. And I'm going to say the Dow, let me just double check here for 1 second because there might be someone waiting for me out there. Oops, have I done this correctly? Well, no, in a second. No. Okay, so here we go. The Dow is up 5 points at 14,618. The S&P is up 0.29 at 1563. The comp index is down 432.17. I always then swing around to look at Apple, down 281 at 423.40. This is going to be very interesting. If we're looking at gold, and this is the reason why we went long gold the other day, the gold, one of the indexes, one of the ETFs. If you're long gold, this is where we're looking at the tide, because as far as I'm concerned, this is a trade. If it turns into something better, fabulous. But it's a trade working out so far, and gold is up. Gold is up 14 at 1587. Silver's up 75 cents at 27.80. Crude oil is up 6 at 3.43. That is great. And bonds are up to 30 seconds, and the dollar is down 43 30 seconds. And I'll show you some of these charts when we get back. Basil Chapman, Tiger Technicians Hour. Dow's down 2.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman, Tiger Technicians Hour. And let me do a couple of things. I was asked earlier, let me find the book, stretch over, to find. I had a question about a technique that I use. I developed when stocks, or whatever it is we're following, gets to a peak C and then pulls back. What happens when it tries to get to a new high to make that leg D? That's a new recovery high, and just fails it? Well, it's a technique that I've used for a long time now, and it's what I call a C1, peak C1, and then it goes to peak C2. Well, the most important thing about it is that in the in the studying of the peaks, I like to think of a couple of things happening at the same time. That sometimes everything is in place to get that requisite in the ChapmanWave, leg D up. But you know, we are not the charts. The charts are the charts. We just follow and do the very best of the techniques that we have. And occasionally what you do is you get a chart that says, I had everything in price, but the technicals were failing. I couldn't quite squeak out that extra couple of cents. In those cases where everything looks like it really was a peak D, and this is a visual thing, I don't know how you can ever computerize that. It's just so easy to see visually, but maybe much more difficult if you use it as a software program. that's where there's a greater chance that it actually turns out to be a top because the pullback is so sharp. So let me go to Lennar, L-E-N, and then I'm going to answer that, and then I'm going to answer another question. That's Lennar back in, oh boy, I hope I've got it on this one. The daily 7, 10, 12. So what are we doing here? We're in 10, so we're going to go to 7. Oh, I haven't got any notations. Isn't that great? 7, 10. Okay, what am I going to do? All right, so that's not going to work. I'm really upset. I don't know what's going on here. Let's go to AN. AN, that'll be done, I'm sure. Yes, there it is. Okay, perfect. So the answer to the question, and in the den, MMS, I'm sorry, here we are. The low of AN, which is AutoNation Inc., which are seeing sales increase all the time. I don't know why the price keeps coming down. Had a low of 38.29 on the 29th of November of 2012. It goes to peak A, it goes to peak B, it goes to C and D. And then there's this technique that I call the instant restart, and it goes to a brand new A, B, then it goes to C1 at 48.92, which is the left side, right side price time match, plus the ChapmanWave inside wedge. Folks, these are all techniques that I teach in the CD introducing the ChapmanWave methodology. Look what happens from the peak F top on the 19th of October of 2012 at 48.56. It makes a measured move from a particular candle that's very important to the right side. It stops right on the day, and the next day it goes to 48.92, pulls back, and runs up, and instead of going to D, it goes to 48.91, 3 cents. But look, the stochastic, the on-balance volume, everything started failing. Look at the relative strength, gave a really great sign because it was failing miserably there. And what happens is that I now change color. I can't put a down arrow on a bar that's lower than the left side. That's wrong. It's the same problem I have when I get the low bar here, and then sometimes you get a restart. And the restart is really where you get the start. That's where you want to put the up arrow. But I don't want to confuse things. The low bar is the low bar of the whole move, and the high bar is the high bar of the whole move. So I put a red, I changed the color, in other words, on C2. And what does it do? It plummets from 48.91 down to 42.61 and then keeps going lower. So that's exactly what I mean. So I wanted to look at that just to explain it. And now another thing that I was asked about, the instant restart on the GLD. So I had an email from one of our TFNers saying GLD, the classic instant restart of the 5-minute bar at 9:30. So I wanted to go to that, but to say, you know what, the other index that I use, the smaller index, which mimics the price, that actually did something a little different. So in this particular instance, the GLD goes from a peak A in the 5-minute chart on the 8th of April at 11:25 to a peak D at 13:35 at 1:35 in the afternoon, and then on the 8th pulls back, starts a brand new move and goes A, B, C, D, and right there you get the overlapping wave. You get the instant restart potential. And I'll talk about that in a moment because this is a technique that you have to use, but you've got to use a parallel wave count. Dow's up 3, S&P's under. I'll be right back.
No matter where you listen to TFNN programming, we want you to know that you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right of the TFNN homepage. But if you don't have a mobile connection that keeps up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and call-in radio talk shows. TFNN is able to teach all levels of investors the technical skills needed for trading in today's marketplace. In order to get the best information available, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. We're back. Basil Chapman. Just quickly, I want you to do those 2 questions in the den about what we were looking at here, and then we'll go to the telephone. APH is Amphenol Core A. It must be a pharmaceutical something. I don't think it's a biotech. It must be a pharmaceutical of sorts. In the monthly chart, I've got this as brand new leg C, possibly peak C if there's no new high this month. That's a 72.25. A little bit cautious here because the weekly chart has made 2 buy modes. The last one, now this might be an instant restart, and I'm going to just circle it as such, but this is where I have to keep the concept of the, there we go, parallel wave count in mind, but more importantly, the MACD fast-moving average is saying I'm dipping down and the stochastic's pulling back. The technicals are all very good, but the unbalanced volume's turning down. I'm a little cautious about this. I don't know whether you're long or you're short or you're looking to short. I would just say to you that if you are long, this is the moment, because the daily has just given me the same sort of thing. It's got a peak E, and this particular pattern says that the doji that was made 3 days ago in the daily with a low of 71.45 and a high of 72.53, if at any point in the next 3 days 71.45 is taken out, immediately you're looking at 71.25. That's not the issue. The issue is that could be a pullback, and that pullback could take you to about 70.46. And then the major test will be 68.86. That's the level that I'm watching at, number one. Number two is this a short? Let me put it this way. Because yesterday the market was up and it did very well. Today the market started to pull back. Now it's up 17. Don't fight that VIX index being so low, folks. I would say to you that the 9-period moving average is becoming vulnerable. If you want to get 4 points out of it, maybe 3 to 4 points, short right here, but your buy stop better be 1 penny above today's high of 73.29 and 72.38. APH is the symbol. Now, more importantly about this is that the monthly chart says if you're going to short, make it a quick trade and lower your buy stop. I'd be looking to buy this thing for leg D if it gets to the 68 to 66 area. So I hope that helps. The next one was, I was asked about, oh, wow, a lot of information in the den. eBay. And so the first one was for, let's see, that was for Tiki-Tot. And this one here is for eBay's Halo. All right, Halo, eBay, here we go, eBay. I actually like this high-level consolidation. This is going to be leg D. eBay, EBAY, trading at 55.54, down 33 cents. 57.26 was the high in February. 56.84 is the high so far this month. All it needs to do is go 1 penny above 57.26. It starts leg D up in the monthly chart. The weekly chart is potentially double topping. All I can say is that if you're long, I would remain long. Oh, I meant to tell you with the PHA, what was PHA, I hope? Yes, APH, that if you were to take a little bit off right now, better than shorting, just take a little bit off that you want to put back at that lower price in the 68, 66 area. I think that's even better than shorting, because if it keeps going higher here, I wouldn't want to give up money by being short when you've had such a fantastic trade. But if you have no position, then having a short position with that stop is okay. But mostly I'd be looking to buy it. Now back to eBay. The reason why I brought it up is that eBay in the daily chart has this pattern that I call the falling axe. In my CD introducing the ChapmanWave methodology, spent a lot of time talking about this pattern as an expanding cone. Think of it as an expanding cone if you don't want to use the vernacular for the falling axe. But basically, if you have my CD introducing the ChapmanWave methodology, you will find this particular pattern starting at chapter 24, slide 391, out of 28 chapters, 27 chapters. So now what you want from eBay is, how does it handle the twice hit in the weekly chart 57.26 level? My suspicion is, from the way the market's acting, it can go higher. I'm not sure you can get the full extent of a one-to-one on the upside just yet. So eBay, I would put in the category of, if you're long, it's still strong. If you're looking to short, have patience. We can look at it again maybe Thursday or maybe even next week, but I would just hold off on the short side on eBay, and even then it would just be a trade, because I haven't yet got any signs in the monthly chart that the tide is changing there. Let's go to our first caller, and our first caller is Michael in New York. Hi, Michael. How are you?
Good. How are you doing?
I'm doing well.
Orly, O-R-L-Y.
All right. Let's see if I haven't lost all of
today. I wonder if you
yes.
have a look.
Now we're getting some sign that the double top is possible, and that's in the monthly chart, and that the weekly chart is still very strong technically, but it is turning down. Unbalanced volume has given a nice signal, and the daily chart has made that, oh, there's that rectangle. Look at this. You know, rectangles can stay around for a long time. But do you have a position in this?
Yes.
Okay, and you're short, is that correct?
Yeah, correct. Yeah.
Okay. This is what I'm going to recommend. In the Orly, O-R-L-Y's O'Reilly Automotive Inc. is trading at 101.56, down 2.35. If O'Reilly and AZO, oh, look at that, peak F top in AZO. Just talking about it the other day, and I forgot to look at it, yes, last night. Now, there's the thing. You know what? I'm going to recommend you stay short. I'm going to recommend you add right here a trading position, a separate position altogether. This one has a stop of, this one will have a stop of 103.60-ish. If it goes higher than that, it means that it's going to try to rebound from the 9-period exponential moving average. Right now is your best chance that it's going to crack the 98 area. If it cracks 98, it could get to 95 quite quickly. Now, I'm watching these real closely. Is this the tip-off that we are going to be looking at a deeper decline coming up real soon in the general market, because these have been the stalwarts. These are, we've been looking at this a long time together, and these have been the ones that, this is basic auto repairs that people do at homes. It's all the parts, the truck parts, car parts, etc. And things are going very well. But it might also be that there's been a much greater interest in buying new cars. That's really what I think it is. Either new cars or just straight hand, second hand, let's call them used, of 1 to 2 to maybe 3 years. And that's something I've noticed a lot. I look at the newspaper, I look at whatever I can to get that sense. So we might be seeing the dearth of people keeping their cars longer and longer right now, as people finally say, you know what, I'm tired of these $1,500, $2,200 repair bills just to keep my car another 6 months before the next bill comes. I think it's time to look at something new. That might be happening here. That'll be a very positive sign for the auto industry if my reasoning is correct. So I'm going to recommend add to your short right now. This one's going to be a trading short, and if it does get to 99, just make your stop. A second position must not lose money if it makes money. In other words, at 30 cents or 50 cents, you're not really making money. But if it gives you a couple of points, immediately the trading position, the rule must be it cannot lose money. A break even, okay. But even that could be split as a half position. So you add something now as a trading position, and that one you can have a trading stop and a fixed stop. So a fixed stop is no loss. Trading stop says every 2 points down, I'm lowering it by 2 points, something like that. But that's my recommendation. And I'm watching this closely, because if there is a double top and it cracks 95 in the next month, it could go all the way back down to at least the 78 area. I'm not saying it's going to happen. I'm saying that's the pattern that I'd be looking for. But the MACD and stochastic and the weekly are saying treat this as possibly the start of a down move, but only possibly, because the MACD fast-moving average is still very strong, as I'm showing right there, and the stochastic is still at 86%. So I hope that helps you.
Yep, thank you very much.
Thank you very much. Let's go to Charlie in Atlanta. Hi, Charlie. How are you doing?
I'm doing well. Thanks for taking my call, Basil.
My pleasure.
I shorted Priceline between the 719 to the 710 area.
Yes.
I covered one of my positions yesterday at 689. And I'm wondering, it's in an area where it could, it's right under the 9-day, under the 50-day. I'm wondering what you think which way do you think it's going to head? Break through or stay under?
Okay, so in my CD introducing the ChapmanWave methodology, there's a technique, and in fact, if you look, here's a real good example. Have a look at the GLD monthly chart, and you see it comes down, and then it makes an H pattern that turns into an M pattern. These patterns we are very familiar with, and one of the reasons we were able to get a very nice entry. I'm not sure it's going to work 100%, but so far it's working well on a stock that an ETF that resembles the GLD, is that there was the same pattern you can see in the daily pattern. And what happens is sometimes it'll break underneath after the M is completed, and that starts a really strong move to the upside. So I'm looking at eBay and I'm saying, hey, I know this pattern. The pattern is kind of similar to ones we've seen before, that there could be a large H pattern forming in the daily, but most importantly, Priceline. I knew I was looking at a chart that wasn't the right chart. There could be a pattern that's forming in the daily. That's an M, an H that goes to a larger H. Let me just draw this in for you. So this is an A, and that becomes an F/B minus. I just want to clarify that. Now, this is the pattern I'm looking at. If you're looking at it, I don't know if you can see it, but on Tiger TV.
I'm looking at it on Tiger TV.
You are?
Yes, I'm watching.
Great. Okay. Now, watch what I'm going to do. I'm going to do that. I won't even put the letters in. I'm going to do that, and then I'm going to do that, and then I'm going to do that. And you'll see we're looking at almost the same kind of pattern. So I'm going to also put the notation here of an A to a B, peak B, to a C. I haven't got a C minus yet. So this pattern is saying to me there is tremendous resistance because it's in a containment area. I don't want to make it look messy, but I'll do this because it's very important. Let me just see in my charts. I'm looking at the same charts as you are on Tiger TV. Absolutely. There it is. There's the H to an M pattern. There's the rectangle. That gray rectangle says that your short was probably the right move for if it was a little bit higher, because what will happen is that the whole area of price line PCLN is trading at 695.26, down $1.27. No big deal, down 0.18 cents. However, and this is really important, however, what we're looking at is that this H to an M pattern says that at some point there could be another rally. It probably can't take out 707.27 at this particular stage until it goes down a little bit further. If price line takes out 687.42, the low of the fifth, then all of a sudden what you're looking at is the chance that it's going to take out 679.71. The bar that takes out the left side low is the bar you've got to be very careful of, that and the next one, because very often they plunge to the downside. It looks horrible, but all of a sudden that bar makes a reversal, and maybe by the next day the reversal is strong enough to get back into and go back above 702.69, just to visit its friends to say, whoops, I didn't say goodbye, or forgot my hat or my jacket, whatever it is, and I'm going back down. But if the technicals are at the lows, and this isn't, that's the reason why I think you've got yourself a good trade. If it's at the lows, that says you can get a new bicycle that can take it sharply higher. But if the technicals like now, the MACD is deflecting lower and the stochastic is only at 54%, there is a really good chance that it's going to come down. And what will it do? If it takes out 679, then the low bar of 665 would be your target. So step by step. Now, where would this be showing too much strength? If eBay goes towards 707.27, that's a long way to go from, yes, 12 points. But I'm saying if it goes above that and the technicals, the MACD actually starts to turn positive, I would not be looking to short. Now, here's another technique that you need to know of. This particular pattern can sometimes have the potential of being a very bullish pattern, because there are two conflicting patterns. The one is the H that goes to an M, and the other is a chance that it makes a cup formation and has a very strong rally. So if you had to ask me, is Priceline the stock that I would be wanting to short for a bigger move? I'd say to you, based on the weekly chart and the monthly chart, I think there are enough fund managers. It looks to me like they're still wanting to buy the dips. So I would treat this as a short-term trade. And what I'm going to recommend is that watch it closely. If by the end of the day, see now the market's bouncing up to plus 17 Dow, plus 1 on the S&P, a big fight going on. If Priceline has the temerity to actually take out today's high of 700.71, I'd probably say to you, you know what? You'll get a better opportunity a little later on. I wouldn't hang around. I'd just cut bait and say, that's it, I'm done. Now, if by Thursday morning or Friday afternoon it hasn't taken out the high of today, 700.71, and it takes out the low of today, 690.65, then I think you've got yourself a nice trade. I wouldn't hang around too long on this trade. So as soon as it starts to decline, use a trading stop, and it'll take a few days to do that. And maybe we can talk again. Maybe Thursday morning we can look at it again. So thank you for calling, Charlie. I hope that helped you.
It helped me a lot. Thank you very much.
Thank you very much. Basil Chapman here. Final segment coming up. And then later today, I'm off to San Francisco.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, the Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. Basil Chapman, Tiger Technicians Hour. So, this is what I wanted to show you. There's a chapter 19 in my CD introducing the ChapmanWave methodology CD book. The instant restart. The instant restart is the only time when the high bar that confirms peak D can also be the low bar that starts a leg A up. In other words, the bar that concludes a buy mode also starts a new buy mode, a potential buy mode, that is. If recognized, it offers a chance to stay in the long position or start a new one with even higher peaks to come. So this is basically what we're looking at here. In the 5-minute chart that I was asked about early this morning, before the open, the GLD made a low bar going to a peak D, and then it pulls back, starts a brand new move, and then at 9:30 it opens very nicely, a very smooth transition. It opens, let's see, 409, today's the 9th, so that's the bar. Yeah, it was really a very nice transition. Yesterday it closed at 152.16, the GLD, that's the S&P Gold Index. And then today it starts a nice move, a little bit of a gap up, and it goes peak C, peak D. But you see the technique here, that the leg that makes D right there also starts a brand new buy mode with parallel wave count, E/A, because within 3 bars and rising lows, I love it. Yeah, I love it with rising lows. That's a powerful move. And it goes to E/A, F/B. And then what I did is I said G/C. And I'm watching the technique of the fast-moving average as it pulls back. I'm watching the relative strength pulling back. I'm watching the unbalanced volume, which is just the most beautiful indicator, continue higher. And that was important. And it goes to a doji peak F, but then one bar pulls back, and the next bar goes to a G/C. Then it holds the 9-period moving average. Look at that beautiful thing, that maroon line. That's the 9-period exponential moving average. And what does it do? It goes from the G/C, and one of the reasons, this is how I came up with the technique. Let me put it over here. I used to get this thing that went D, E, F in the Chapman wave, and then it went to a G. Now, you can't go higher than a G. There's no H. So you have to be either restarting or thinking about something, or you can fail at G. So what happened was it pulls back, holds the 9-period moving average. The fast-moving average of the MACD does decline. Stochastic does decline. On-balance volume holds. But the price holds. Price is the arbiter of trend. Remember, price, not the technicals, nothing. The price tells you whether it's going up or it goes down. Then you look at the other things to say, is it confirming, is it not confirming? Well, look what happened. This is how I developed this technique. In fact, what happened was it would then go to a D, maybe even an E, because it took a little bit of time in a cup formation, and then it took a dive. And there's no other way. You can't explain it, because if that was D, that was E, and that was F, and that was G, I'm starting a brand new buy mode. It can't go to A to B and then collapse. Hardly ever do chart patterns collapse at a B or a C. So that's really what I wanted to mention right here. So right now it could pull back a little bit, but this GLD is up $1.61 at 153.77 cents. Now, if you remember what I was speaking about earlier in the week, last week I said gold had made a perfect peak D. In the same pattern we were talking about, the H goes to an M. The M plunges and goes right down. The bar that takes out the left side low of 50.56.40 on the contract is also the bar that's close to a reversal back inside. And that inside says it can go where? To the first peak of significance. That's the one where the gold can go to 1604.30. So I hope everyone got something there. Don't forget, tomorrow night I will be at where? The Marriott Marquis, San Francisco, 6 o'clock to 8 o'clock. Go to the front page of TFNN. Please sign up so I can tell them by tomorrow how many chairs are needed. Also, if you put your name down, you will be allotted a number. I'll be able to give you my... there's one free CD that's going to be given away, but I can only give it away to the people who have their names down. Otherwise, it's not going to be right, because TFNN is doing it from their office. Thanks for being here.
Are you looking for a precision edge?